Hey everyone, Taylor Mathis here, the KEYTLaw Girl, Marketing Director and Legal Assistant at KEYTLaw. Arizona LLC law attorney Richard KEYT has formed more than 6,200 Arizona LLCs as of November 12th, 2018, the day I'm making this video. Richard has 123 5-star reviews on Google, Facebook, and Bird Eye because people love our LLC formation services. Richard's been practicing Arizona LLC law since 1992 and has seen people make the same LLC mistakes over and over. So in this video, I'm going to tell you how to avoid 15 common LLC mistakes. I'm going to jump right into this, but first, give this video a like, comment with any questions you might have about LLCs, and subscribe to our channel for more videos like this one. So mistake number one, a multi-member LLC fails to adopt a tax audit agreement. The Bipartisan Budget Act of 2015 changed the IRS tax audit rules for LLCs taxed as partnerships after 2017. If you want to learn more about this, you can read our article linked below called LLCs Taxed as Partnerships Must Adopt a Tax Audit Agreement. It'll tell you why all LLCs taxed as partnerships must adopt a tax audit agreement that contains language that deals with the new audit rules. Also, if you want to hire KEYTLaw to prepare one for you, it's $497 tax audit agreement. You can complete our tax audit questionnaire, which is also linked down below. On to mistake number two. A parent names a minor child as a member of the LLC. Here are the reasons why this is a bad idea. Number one, minors do not have the legal capacity to sign contracts including the LLC's operating agreement. It is possible that third parties the LLC deals with, such as lenders, a bank, or a title insurance company, may want to see a signed copy of the operating agreement. But the only way the minor can sign the operating agreement is if a parent gets a court order that appoints the parent as the conservator of the child's assets. This could easily cost between $2,500 and $5,000 in attorney fees and court costs. Reason number two, the child would actually own the membership interest under Arizona's Uniform Gifts to Minors Act, which means that at age 18, the child becomes the sole owner of the membership interest. This means after age 17, the child could sell or transfer the membership interest, or the child could get sued and have his or her creditor attack the membership interest. If the child were to marry, the child could convert the membership interest to community property, and the new spouse would own 1/2 of what the child owns. If you think the child's membership interest currently has or might one day have a substantial value, the better way to give interest to the child is to create an irrevocable trust for the benefit of the child. This is an especially wonderful gift and estate tax saving device. If you need one of these trusts, call us. Our number is right here on the screen and in the Show More section below. Richard KEYT is also an Arizona estate planning attorney. Mistake number three, the company fails to set up QuickBooks immediately after being formed. The LLC must properly maintain accounting and bookkeeping records, and the lack of good books will be used against the LLC's lawyer if somebody sues to pierce the veil and hold the owner liable for the LLC's debts. Good books are needed to prepare the LLC's tax return or to prepare the Schedule E for owners who report income and deductions on their IRS Form 1040. This really is a no-brainer. Just buy QuickBooks as soon as you form your company. Every year you'll be able to make a tax preparer's file to give to your tax preparer, who will use the information in QuickBooks to file and prepare your tax return. Bookkeeping can quickly get out of hand if you fail to set up your bookkeeping software from day one and faithfully enter all income and expense information into it. Mistake number four, the LLC owns real estate or valuable property, but it's not named as the insured on the insurance policy, or the property is not insured. If your LLC owns your rental property and the house burns down, the insurer will deny coverage unless the LLC is the named insurer on the policy. An additional insured name in the policy, or there is some language in the policy that causes the LLC's real estate to be covered. Don't rely on that last possibility. If your LLC owns real estate or any other valuable asset, talk to several business insurance agents to get their recommendations as to the types of policies, coverage amounts, and other policy issues, and then purchase the appropriate amount of insurance. Mistake number 5. Members who are supposed to contribute money or property to the LLC don't agree to do so in writing. Arizona LLC law says that a member of an Arizona LLC is not required to make any contributions of money or property to the LLC unless the member agreed to do so in a written document signed by the member. We have seen many companies where one or more members refuse to contribute money to the company despite the begging and pleading of another member or other members of the company. If you want to create a legal obligation on a member to contribute money or property to the LLC, then put the payment amounts and dates in an operating agreement and get all the members to sign it. The solution to this problem is to include each owner's future capital contribution amounts and due dates in the LLC's operating agreement and have all the owners sign it. Once signed, each owner can be sued for breach of contract and be liable for the unpaid contribution amount plus attorney fees and costs. Another important thing to note from talking to tons of LLC owners, that if the operating agreement with the contribution requirements is not signed immediately after the formation of the LLC, it's really unlikely that it's ever going to be signed, in which case no owner will be legally obligated to pay any money or give any property to the LLC. So the solution to this problem is to purchase Richard KEYT's custom operating agreement customized for your LLC. To hire Richard to prepare an operating agreement, go to the Show More section area down below this video and click on the link to Richard's operating agreement questionnaire. For more information on this topic, you can also read Richard's article called Common LLC Disasters: A Good Operating Agreement Prevents. Mistake number 6. Not understanding how community property law affects LLC ownership of married Arizona residents. Arizona married residents incorrectly think that if they form an LLC by filing articles of organization that does not name their spouse as a member, that the married person named as a member in the articles of organization will own his or her interest in the company as separate property. That's actually completely wrong. Arizona community property law provides that all property acquired during marriage by a married person who is a resident of Arizona is community property unless the property is acquired by gift or from an inheritance. This means that the spouse who is not named in the Articles of Organization or any other LLC document as a member automatically owns an undivided 1/2 community property interest in the total amount of the company owned by the spouse who is named in the documents as a member of the LLC. If an Arizona resident who is married wants his or her own interest in the Arizona LLC as separate property, that person must prepare a disclaimer of membership interest and get the non-owner spouse to sign the document. By signing the disclaimer, the non-owner spouse acknowledges that the other spouse owns all of the membership interest as separate property. If you need a disclaimer of membership interest for a non-owner spouse to sign, go to our secure online LLC form store, which is linked below in the Show More area, and purchase our downloadable and editable disclaimer of membership interest form and fill in the blanks. Mistake number 7. A person who has a trust owns one or more LLCs in his or her name instead of the trust owning the LLCs. One of the reasons people create a revocable living trust is to avoid probate. More often than not, when we ask clients with a trust and an LLC if their trust is the owner of their LLC, they say no. The trust must be the owner of the LLC to avoid probate on the death of a trust maker. This means the person or persons who is the owner of the LLC has to 1. Sign a document that assigns the LLC membership interest to the trust, 2. file an amendment to the Articles of Organization on file with the Arizona Corporation Commission to change the member from the person to the trust. 3, amend the operating agreement to show that the member is the trust, not the person, and have the trust and all other members sign the amended operating agreement. To hire us to prepare the documents needed to document a transfer of membership interest from one owner to a new owner or to the LLC, click the link in the Show More section that says Add or Remove a Member Questionnaire. Mistake number 8. The owner of an LLC does not prepare for death. All people who own interest in an LLC will die. Almost every person who owns an LLC would like his or her spouse, family, or loved ones to inherit the company when the owner dies. Unfortunately, few LLC owners plan for death and the orderly transfer of their LLC ownership to their desired heirs. The transfer can be simple. The LLC is owned by a trust or the owner signed a transfer of membership interest testament, or the transfer can be a time-consuming, expensive, and public probate. Do your loved ones a big favor and plan for your death so you will know for sure that your desired heirs inherit your LLC automatically without the need for probate. For more on this topic, read our article, Who Will Inherit Your Membership Interest in Your Arizona LLC When You Die? Mistake number 9, a member contributes money or property to the LLC but does not properly document the transfer. LLC owners rarely document properly transfers of money and property to and from the company. The member is free to transfer funds into the LLC at will, but the failure to characterize and document transfers can have too many bad consequences for the LLC and its owner. If Homer Simpson wants to write a check to his LLC for $10,000, he can do so at any time, but legally the payment is either a capital contribution or a loan. But if the owner and the company do not properly characterize the payment as one or the other, the IRS or a court may do so in a way that is adverse to the owner. If the payment is a loan, the LLC should sign a promissory note with repayment terms, and the members of the company should sign an action of unanimous consent that contains a resolution approving the loan transaction. The payment should also be reflected on the LLC's books as a loan. If the payment is capital contribution, then the LLC's books should reflect that way. The failure to properly document payments by the LLC's owners to the company can also be used by a court as one factor in favor of a finding that the company did not follow the formalities of Arizona LLC law and that the bail should be pierced to allow a creditor of the LLC to impose a debt of the LLC on its owner. Mistake number 10, a real property owner creates an LLC to own real estate but does not transfer the title to the LLC. We see this mistake all the time. The primary reason owners of investment rental properties need an LLC is because they do not want to be the defendant in a lawsuit arising from a breach of the lease, somebody being killed or injured on the property, or any other claim that might arise from the property. It is fundamental that the protection offered by an LLC does not apply, and the LLC is a complete waste of money if the real estate is not transferred to the LLC. Mistake number 11. The LLC owns rental real estate, but the lease is between the owner of the LLC and the tenant. Instant replay of the preceding mistake. If the LLC has title to the real estate and the landlord on the lease is the owner of the LLC, guess who will be the defendant on the breach of the lawsuit? You got it, the owner. The lease must be between the LLC as landlord and the tenant. If the owner signed a lease before the real estate was transferred to the LLC, then the owner needs to prepare a new lease that is identical to the old lease, except it names the LLC as the landlord and has a new start date and says the old lease is canceled. Mistake number 12. Members of a multi-member LLC do not sign a buy-sell agreement. We recommend that every multi-member LLC, other than a husband and wife-owned LLC, have a buy-sell agreement signed by all the owners. The buy-sell agreement contains the owner's exit strategy. Without an exit strategy, the members of a multi-member LLC are stuck together for life. Arizona's LLC law does not provide any way for LLC owners to carry out a member divorce other than through a very expensive court dissolution procedure that will kill the LLC. We know that more than half of the people who marry will get divorced. So the statistics for business divorces are even higher. The lack of an exit strategy is one of the most common causes of a very expensive lawsuit between LLC owners who want a company divorce. For more on this subject, read a multi-member LLC's most important document and our buy-sell agreement website. Both are linked below in the Show More section. Mistake number 13, no operating agreement. Although Arizona law does not require the members of an LLC to sign an operating agreement, the lack of an operating agreement signed by all members is a big mistake. There are just a few of the reasons why every LLC should have an operating agreement. 1, to prove the percentage of the LLC each member owns. The Articles of Organization filed with the Arizona Corporation Commission does not state members' percentage ownership. If the company is manager managed, it doesn't even list the members who own less than 20% of the company. 2, to restrict the transfer of membership interests without the consent of the members. Without an operating agreement that contains restrictions on transferring a membership interest, a member can transfer all or a portion of the member's interest in the company to anybody at any time for any consideration or no consideration. 3, to prevent members from disclosing confidential information about the company. Unless a member signs an operating agreement with confidentiality provisions, the member is free to disclose the company's confidential information. 4, to limit the management powers of the managing member or the manager. The operating agreement should state what actions the managing member in a member-managed LLC or the manager in a manager-managed LLC can take without getting member approval, and what actions require the vote and approval of all the members. To learn more about important LLC documents, read Richard KEYT's article called Why Your LLC Needs an Operating Agreement, linked in the Show More section below, and also watch our video on why operating agreements are so important. Mistake number 14, the owner does not keep the LLC's income and expenses separate from the owner's income and expenses. This is the most common mistake we see over and over again. The single most important legal formality of an Arizona LLC is the requirement that all of the LLC's income must go into its bank account and all of its expenses must be paid out of the LLC's bank account. If the LLC is short on cash, the owner or owners should write a check payable to the LLC and deposit the funds into the LLC's bank account so the LLC can use the funds to pay its expenses. The reason this is potentially the worst mistake for an LLC is because in a lawsuit brought by a plaintiff to pierce the veil and hold the owner liable for the debts of the LLC, the failure to follow this rule could be the primary reason the court pierces the veil and holds the owner liable for the LLC's debts. Mistake number 15, members do not sign an operating agreement drafted for Arizona's new LLC law. On April 10, 2018, Arizona adopted a new limited liability company law called the Arizona Limited Liability Company Act. This new law replaces existing LLC law in its entirety. ALLCA governs all Arizona's LLCs formed after August 31st of 2019 and all LLCs after August 31st, 2020. ALLCA contains many adverse provisions that can be eliminated by a well-drafted operating agreement that complies with the ALLCA. All existing Arizona LLCs need an ALLCA compliant operating agreement as well. All of our operating agreements have been ALLCA compliant since May 1st of 2018. People who hire us to form an Arizona LLC or prepare or amend an operating agreement will get an operating agreement that contains approximately 20 pages of text derived from ALLCA, so they will not have to amend the operating agreement after August 31st of 2019. What's the biggest mistake of all? If you're forming a new Arizona LLC, the biggest mistake you can make is to not hire Richard KEYT to form your Arizona LLC. See the contents of our bronze, silver, and gold LLC packages. His silver LLC is cheaper than LegalZoom for similar services. To hire Richard to form your new Arizona LLC, submit his LLC formation questionnaire linked in the Show More section below. Questions: if you have questions about forming or operating an Arizona LLC, call Arizona LLC attorney Richard KEYT at 480-664-7478 or his son Richard C. KEYT at 480-664-7472. They don't charge to answer questions about LLCs. So there you have it, the 15 most common mistakes most LLC owners make and some ways to avoid them. Don't forget to like this video if you thought it was helpful, comment with any questions that you guys have about LLCs, and subscribe to our channel for more videos like this one. And everything I discussed in this video is also linked in the Show More section below.